column cash flow. I heard that you have done one column, two column, right? So I'm going to be asking questions. I want somebody in this class who is bold enough. Stand up, you tell me your name, and then you define for me what is accounting. That's what the simple question I'm asking. What is what? Accounting. So I need somebody. Lift up your hands. Lift up your heads. Try lifting up. Yes, let me hear. The beautiful lady with the cap. Can you stand up?
Accounting My name is
Michael, okay.
Accounting can be defined as the process of recording information, interpreting, analyzing financial statements.
Daniel.
Accounting can be defined as the process of recording, classifying, and identifying and analyzing business transactions to enable users to make decisions.
Accounting can be defined according to the AAA as the process of identifying, measuring, and communicating financial and economic decisions to stakeholders, not the users.
Accounting can be defined as an act of recording, classifying, summarizing of financial transactions, and reporting the results to the users.
Accounting, according to AAA, define accounting as the art of identifying, measuring, and communicating economic and financial information.
For users of accounting.
Alright, everybody. Why am I asking us to define accounting? Because that's the course you are studying, is not true. So I want you to understand what the course you are studying is all about. Are we there now? So accounting, according to the American Accounting Association, we define accounting, like she said, as the process of what? Identifying, measuring, and what? Communicating. Let me use communicating, not verification. So as the process of what? Identify, measuring, and what? Communicating economic and financial what? Information. What you are communicating is what? Information. So you are communicating economic and financial what? Information. Now, who are you communicating to? The users of the word accounting information. Now, after you have communicated to them, you are supposed to do something with that information, not you. So, when you have communicated to your users, they now make what? Informed decisions. These are the three major processes that involve in what? Accounting. You identify, you measure, and then you what? Communicate. If as an accountant, you are unable to identify, you are unable to measure, then you cannot communicate what? Information. Are we there now? So in accounting, we record, we analyze our records, we classify records. Are you with me now? We summarize. You don't give bulky work. You summarize and then you communicate and you what? Interpret. As an accountant, you are like a lecturer for a shareholder. You are a lecturer for a what? A shareholder. You are a lecturer for a business owner. Are you with me? So your course is highly what? Professional. For you to be able to manage people's funds, you need to be able to keep what? Records. For everything that you do, you write down. Is it not true? Yeah. Accountants, we have to what? Write down. That's what we do as what? Recording. Recording is all about writing down. But in accounting, we want to use professional grammar. Are you with me now? So instead of saying writing down, we say what? Entry. We enter what? Transaction into the relevant books of what? Accounts. Now, I'm trying to come back to where we are going to be trickling what? Cash flow. When you enter transaction into the books of accounts, you say you are recording. Do you know the books of accounts? Do you know what the books of accounts are? We have the subsidiary books and the what? The principal book of accounts, also known as the what? The ledger. Now let's talk about the subsidiary book of accounts, then we work on the cash book. Under the subsidiary book of accounts, we call them book of original entry, right? Yes. We call them book of original entry. Now, how many subsidiary books can you think of? How many subsidiary books do we have? Okay, 6, right? So I want somebody to mention, I'll pick one here like that. If what I can have there, but to mention the 6 for them. Number 1, Linus, let me hear from you. Purchase table. Purchase table is also called what? Purchase order. Right? Now, a lady. Yes. Sales table. Very good. Sales table is also called what? A brother from this side again. Yes, let me hear you. Returns inward journal. Your returns inward journal is also called what? Return inward sales. Returns inward journal is also called what? Sales return. Sales return journal. Your returns inward journal. If I don't mean you full meaning. Your return inward journal is also called your sales return word journal. Now, another type of subsidiary book is what? Yes, we start from this side. Yes, let me. Yes, ma'am. Cash flow. Alright, let's go. Okay, cash flow is part of it. But I wanted to. Cash flow. Yes. Return outward journal, yes. And somebody was saying the other name. Return outward journal is also called what? Purchases return journal. Are we there? And then number 6 is what? General journal. Now the general journal is also called what? That's nice. Okay, so now today we are looking at the what? The cash book aspect of the what? The subsidiary book. Are we there now? We are looking at the cash book. And we can divide this cash book now into how many? Into how many branches? Into 4, right? Yes. You have 1 column, right? Yes. You have 2 what? Column. 3 column. And lastly, you have 13 words. So you can split down your cash book into 4 categories or 4 branches, right? You have 1 column cash book, you have 2 column cash book, you have 3 column cash book, and you have what? 13 cash book. Now, I would also want you to know that of all the subsidiary books, are you following me? Yeah. So of all the subsidiary books, it is worth noting that of all the subsidiary books, the only subsidiary book that has to do with immediate receipt of cash or immediate payment is the what? The cash book. That means every other subsidiary book, every other subsidiary book is focused on what? Credit. Are you with me now? Every other subsidiary book is focused on what? Credit. Only the cash book has to do with what? Immediate payment. Are we there now? Yes. Every other subsidiary book has to focused on what? Credit. That means there's deferred. Have you heard of deferred payment or delayed payment? Yes. Payment is in the future. It's not now. But in the cash book, payment is what? Now. Money is received now or money is given out what? Now. Are we there now? Yes. Okay. So like you should have done your 1 column cash book only has 1 column for amount, yes. And the focus of the 1 column cash book is just what? Cash in hand. Is it not true? That is the liquid money. That one you are holding in your hand. Your 1,000 naira notes, your 500 naira notes. That is your cash in what? Hand. The 2 column cash book now has 2 columns for what? Amount. That is cash in hand and what? Cash at bank. The 3 column cash book now has 3 columns for amount. We have the cash in hand, we have the cash at bank, and then we have the what? Discount column. So before we start the class, or before we start calculation, I'm going to start the class. Before we start calculation, I want us to write something about what? Discount. Are you following me? I want us to write something about what? Discount. Now, what is discount? What is discount? What is discount? You'll be hearing discount. As an accountant, what is what? Discount. So discount can be defined as the reduction in price. The reduction in the bulk price of goods and services with the aim either to encourage bulk quantity purchase, like purchasing in large number. If I'm going to say bulk, that means it's plenty. Either to encourage bulk quantity purchase or to encourage what? Prompt payment. These are the two major reasons why we give discounts. You either want to encourage somebody to buy in large quantity or to pay what? On time. So a reduction in the bulk price of goods and services with the aim to either encourage bulk quantity purchase or what? Prompt payment. Are we there now? So from the aim I just gave, we can have two types of what? Discounts. Two types of discount very quickly. Number one, trade discount. Number two, what? Cash discount. Number one, trade discount. It's a type of discount that is given to encourage what? Bulk quantity. You know the spelling of bulk?
Yes.
Good. That is given to encourage bulk quantity what? Purchase. You want to encourage people to buy in large quantity. So everybody that buys in large quantity, every buyer, are you following me? Everybody that buys in large quantity will enjoy what? Trade discount. Are you with me? Everybody that buys in large quantity will enjoy what? Trade discount. Now, number two type of discount is the what? Cash discount. Now, cash discount is given to encourage what? Prompt payment. It's not really because you bought in large quantity, but because they want you to pay what? On time. These are the risks that are associated with what? Credit. So cash discount is given to encourage what? Prompt payment. That is quick payment. The cash discount is treated in the 3-column cash book, whereas the trade discount is treated in other subsidiary books. So our focus today is cash what? Discount. Are you with me? So for our 3-column cash book, we'll be treating cash discount, and then under cash discount we have two more discounts, right? Discount allowed. Discount allowed and discount received. That the discount allowed is that discount that was given by a company to customers to encourage them to pay on time. The discount allowed is given by company to customers to encourage them to pay what? On time. When a company gives discount to customers, it's a discount was allowed. Discount allowed is an expense for the company. Hope you know. Yes. Now you are expecting 50k now, 45k came to you. Have you not had shortage? So it's an expense for the what? The company. When the company give out discount to customers, it's called what? Discount allowed. You want to encourage customers to pay their bills on time. You can give discount. Alright. Now the discount received is a discount that company receives from suppliers. The discount received is coming inside the company. That is the discount that the company receive from supplier in order to encourage company to pay them what? On time. So suppliers too can give company discount. Is it not true? If they also need money, they give the company discount. Now let's go and apply discount in a 3-column cash book. That's our focus. In a 3-column what? Cash book. Hope you start about contra entry. Yeah. I believe you all know about contra entry. Good. So I'm going to ask somebody, what is contra entry? What is contra entry?
A contra entry.
You are doing the distance.
My name is Bakulai. A contra entry is a type of double entry that involves two separate ledger accounts. That is the discount, the cash and the bank. That is one account will receive and the other one will be debited.
One account is debited and the other one is what? When one is leaving You are depositing cash, your business cash in the bank. Money is leaving cash account and entering the what? Bank account. Or you went and withdrew money from the bank for what? Business use. You withdrew money from the bank for what? Business use. See, it's a contract because money left the bank to the business what? Cash account. In the case where you withdrew money from the bank for personal use, is this still contract entry? No. It is called what? So let's see 3 column cash flow. Good. So why is the discount allowed on the debit side and the discount received is what on the credit side? And I also told you that increase in cash is what debited and decrease in cash is what credited. Now if discount allowed is an expense, why is it what debited? And you don't give us one reason. I say it's because of what? Because of the what? Sales. So the sales is going to be debited. I mean discount allowed is only given when people pay on time. Is it not true? Yes. So you will not attach the discount allowed to what? The sales. Another reason is because discount is a memorandum what? Account. Discount is a what? A memorandum account. So it does not obey the law of what? Government. It's a memorandum account. But when we get to the ledger, discount allowed will be debited and discount received will be what? Credited. But in the cash book, we see discount as a memorandum what? Account. At the end of the month, when we are balancing accounts, we will not balance discount account and discount received because they are 2 different accounts. Are you with me now? There are 2 different words, accounts. You can balance cash, you can balance bank, but you cannot balance discount allowed and discount was received because there are 2 different accounts. So what you do is just sum them and bring down the total amount. Are we there now? What kinds of men wears? Of men's wear? The following are balances at the beginning of the month of May 2015. Cash 40,000, bank 89,500. So we have expenses all through the month of May, all the way to 31st of May. Are we there now? And we are required to prepare a 3 column cash book from the above transaction above balancing of. Are we together? Yes. So we're going to be entering and then balancing of. Are we there? So like I said, the first thing we do when preparing any account at all, the first thing we do is what? The name of the what? Business. So here we are giving the name of the business, and the name of the business is what? They are written the name of the business, right? Yes. Now the second thing you do is what? Indicate account, 1 column, 2 column, or 3 column. What if it is not cash? What if it is not cash? The next thing you do is the name of the account. Are we there now? The name of the what? Account. The name of the account. So in this case, this account is a what? A 3 column cash book. Are we there now?
Okay, man, the first one is the owner of the business, then the second one is the name of the account. Okay.
The second one is going to what? 100%. Now, by the second, we need to put that 4% because you can deal with the balance. So, automatically, what you get is what? Like 6%. Are you following me now? So, there are 2 different. In the first place, the money are always both how much are always and the discount, both are. The money we get is just they are removed to the balance. Are you following me now? Now, another after again, I do. Now, let's go and see how much are we with the
already discounted figure. Are you there now? To this particular case now, this 500 was a discounted figure. Are you following me? Did you understand? If you have paid her 5,000 naira of the amount owed to her, you don't know how much owed to her. You understand? But after that matter was owed to her, what did you pay for her for? 5,000 naira. After deducting 2.5%, automatically what we give her is no longer 100%. Are you with me now? This is how when you now apply 100 minus what? 2.5. That means that's going to give us what? 97.5, right? And this 500 was 97.5%.